Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. I hope you're doing well. Good to be back. I missed on Friday because I was traveling for a trip to New Orleans with some friends, which was really fun. We did all sorts of cool things. We went through the city, tried out different bars and restaurants, and we did a fishing trip, and it was a blast. Really, really busy weekend. I'm a little bit tired. I think I might have picked up a little bit something on the way back, but we're going to push through. And I chose to miss the one like really interesting day in markets that we've had in a couple weeks. Like, it's been kind of quiet, been kind of boring. And then you get Friday's NFP report, which was a bomb drop on markets, complete disaster. We got to talk about the NFP report. We got to talk about the Fed and their probability of rate cuts changing here. Things got shaken up on Friday. Indices were lower. Today, we do see a bit of a bounce back. Let's just take a look at the market here this morning, taking a look at the SPX. So you can see there's the damage from Friday. Big push lower here. And this market has been so pumped up. And what I mean by that is things have been really good. We've had a really good couple months. I think the market is and was looking for any excuse to sell off a little bit. I mean, when you get this kind of run, guys, this is the S&P 500 index, 33.5% up in a couple months. You're due for a little bit of a pullback. And it doesn't mean that you have to have one like right away or that timing that is easy. But think about this, right? I said this in a stock video that I did last week on my other channel. But when the markets are like in free fall panic mode, the reason it's really hard to short a market that's already falling dramatically, and the reason that it is really hard to long a market that is already in bull run mode, the reason that those two scenarios are similar is because the expectation of the market is already very sort of priced in. It's very, very hard to impress a market that goes up every day, and it's really hard to scare a market that's already terrified. Does that make sense? I hope it does. Nick, we didn't get a Sunday set up. Yeah, no, I wanted to do a video, but it wasn't happening. I had a long travel day yesterday, and I've been busy. It's been wedding season and friends gatherings. And so sorry about that, but we're back to regular scheduled broadcast at this point for a little bit. So anyways, the jobs number, all this, right? That the market was looking for any reason, and it still has potential. In my opinion, you still have room to come down. Do I, am I betting that it's going to go down? Am I shorting it? No. But I think that when you get a market that's in free fall and everyone's scared, it's really hard to scare them further. And when a market is really, really bullish and everyone's really excited and everything looks perfect, it's really hard to impress the market. Remember that sentiment is very, very important in markets. And so right now, that NFP report number drops and the market just goes, oh yeah, we're selling, right? So it takes that as an opportunity to sell. Does this mean that the world is ending and that the entire economy is going to come crashing down? Not necessarily. It was a bad print, and it was bad revisions too. That was really where the damage was done, was actually, ladies and gentlemen, in the revisions. If you were confused by what happened on Friday, yeah, we missed NFP. That was a little bit of a little spook, but it was this yellow line, which we show in the software that I'm looking at, shows us revisions, right? Revisions to prior numbers. The one in that we got July 3rd, which would of course be June's labor numbers, got revised from a massive beat to a ginormous miss. I mean, disappointing for multiple reasons. Like what is going on? How are we getting the jobs numbers this wrong? Like, that's a huge margin of error. I know there was drama around Trump firing somebody or something about the jobs numbers or whatever, but I mean, it was a crazy report. I had to look twice when I saw the stats coming out. I was going through the airport at the time. So where do we go with this? Does this completely kill the bull case for the dollar? Well, I do want to look at that, but it's certainly not a good one. It takes us going. It was looking like we're like, okay, jobs data is real strong. To now we're back in the camp of weak jobs and rate cuts. What's interesting, I heard somebody talking about this, is that the administration is very much like, the economy is amazing. We also want rate cuts. But the Fed doesn't usually operate like this. The Fed typically says you'll get your rate cuts when the economy is showing signs that it needs them, right? That's typically the way the Fed behaves. And to the administration, to Trump's point, right? Too late, the Fed is typically lagging to a certain extent. It waits for data to start materially worsening before it really cuts rates, usually. So, we got some drama on Friday with the jobs print, and I don't know if you guys saw this, but I posted on Twitter. Essentially, what that meant was one thing: rate cuts, right? Here's the 2-year government bond yield. Dropped substantially on Friday and did not bounce. I mean, that was this right here, guys. This tells me what we needed to know about the NFP report. The market looked at that. The bond market said, oh, yeah, we're rate cutting. So we'll see. I mean, Powell has been adamant about, oh, we shouldn't cut rates. We shouldn't cut rates. If he stays on the shouldn't cut rates point, then I'm going to just flip to being critical of Powell. Because at this point, that just, now you actually have what looks to be truly softening labor statistics data. We need to cut rates, right? So I think that's what the market is telling you that it thinks is going to happen, is like all this dance about like, oh no, we need to not cut rates. Actually, the data is materially starting to show some signs of weakness. Now, it's not all bad. If we take a look at the economic heat map here for US, right? It's not like we're in dire circumstances. Retail sales were strong. GDP statistics were strong. PMIs were strong, stronger than expected in some ways. But that NFP report, you can see it comes in as a blemish on this report. Big miss. Revisions were bad. ADP statistics were a little bit better than expected. JOLTS job openings came in a little bit soft. US dollar impact is back to 50%, so mixed. But to me, this just suggests, okay, well, the Fed really does need to gear up for some rate cuts. We'll see if we get them, because again, there also is the drama around, the politics side of it. And, is Powell going to try and continue to not rate cut, or is he going to give in? Is he going to, I think Powell should acknowledge the data and say that's his reason for wanting to cut rates now. That's what I would do if I was Powell. If the president is sort of trying to bully you into doing it, I would just say, well, the data is there now. We're going to look to cut rates. And I think that's probably what he's going to do. I think at the end of the day, one of the most fascinating things is that everybody watches what Powell says, but I think Powell just watches what the market says. Isn't there like an 80% chance the Fed's going to cut? Yeah, let's look at it. I believe that's right. It jumped big time on Friday. So here is the September meeting. Yep. 87.5% chance that we are going to get our first cut in September. That is the bond market saying Powell's going to pivot. He's going to become more dovish to, essentially make a move. I mean, jobs data, there is risks to jobs data materially weakening that are scary, right? That's how you go into recession, is jobs get lost on a big scale or hiring really freezes up. On Friday, we saw the Russell get smacked pretty hard. Russell down from its peak. You're talking about a 6.5% pullback. We start looking at the S&P 500, just a 3.5% pullback, nothing crazy. Take a look at the NASDAQ. You're looking at 4.4%. Gold jumped on this naturally. This makes sense, right? Gold jumped because that jobs data a little bit weak makes the market a little skittish, right? They're like, oh, what's happening? Are we about to see some quick rate cuts? That's the type of scenario that gold becomes a little bit more attractive. So we may be in the stages here of seeing, again, gold backing its way up to the highs here to really break out. That's the sort of catalyst you would want to see more of, is jobs data slipping, rate cuts coming in hot, dollar weakness, right? On Friday, we saw the dollar move lower pretty substantially, gave back most of its, well, not most of its gains, half of its gains for the week. We had a really bullish week on the dollar last week, got smacked down pretty hard here on Friday. The question is this a buy, right? So is the dollar a buy on the dip? Well, let me look at it, because there are certain currency pairs that I may be more inclined to look at a little closer. Actually, I'm going to go top setup simplified view. Let's see if we can find anything on that front. Maybe not. Maybe EdgeFinder is slow this morning. Okay, so we have euro dollar getting a bullish rating. That jobs data really helping out the euro dollar score here on the EdgeFinder. Weak jobs data for the US, and I think we had actually an improvement in Europe unemployment rate relative to expectations. Aren't rate cuts bullish for the dollar? Nope. Rate cuts are usually bearish for the dollar or for the underlying currency. Could be ECB cutting rates, whoever. Pound dollar still getting a very bearish reading, or a bearish reading, not a very bearish reading. -7. Employment data did tick in favor of the UK here due to that Friday number. But I do like the idea, the prospect of potentially picking up a short position. I took some profits on my pound dollar short last week. We do have a bounce happening in the pound dollar. This might be one where I join the trade again. I do like the idea of possibly looking for a short setup in a move up to this 1.34 level on the British pound, finding some support in this area. That doesn't surprise me. You had a little bit of an oversold factor here going into it. Weakness on Friday, but you can see why I like this pair. Look at this. Other pairs bounced way harder than the pound dollar, right? Look at euro dollar. Excuse me. Here's euro dollar, right? Euro dollar bounced hard on Friday. And so look at this relative strength, right? Euro dollar just completely ripped higher here without much effort. Pound dollar, on the contrary, did bounce, but it was not nearly as sharp, right? So I actually like that relative kind of weaker bounce from the British pound. If we kind of make our move up into this area, this may be a short for me, depending on what the EdgeFinder has to say. What about Russell, Nick? Buy now? Russell is not. Let me see. Let me just look at indices for a second. I think NASDAQ's our only bullish one. I haven't even looked at the commitment of traders data. I'm doing a lot of catch up here this morning because I was out for the whole weekend. Let me just, what is going on with the EdgeFinder today? Maybe it needs a refresh. But yeah, pound dollar possibly interesting. NASDAQ came down to level support. I didn't buy it, but that probably would be the setup area. So if we get a reversion back into this area, I may look again at the NASDAQ. Yes. Is anybody else's, if you have the EdgeFinder, is it loading slow right now for you? It's probably, it is probably some sort of Google update that is happening. That's usually what it is. If the EdgeFinder is really slow across all the different pages, it's usually not the EdgeFinder. It's usually like Google's software. Anyways, the NASDAQ is, probably the more interesting of the list for me. I prefer it over the rest of them simply because it's getting a higher reading within the EdgeFinder. Yeah, you can see this thing is really slow this morning. NASDAQ is getting a bullish reading. Nikkei is getting a bullish reading. So on the index level, probably more interested in those two. So NASDAQ on a pullback, if we got it, would be great. Individual stocks here open up in 15 minutes. I'm curious to see what happens with Tesla, as I do have a good size position on Tesla. Tesla's up 2.4% in the pre-market. Robinhood's another good size position for me. Interesting. Yeah, you're getting a little bit of a bounce back in stocks here this morning. Let's see if that materializes into something bigger, right? So if you are a index trader, if you're watching the NAS, right? A lot of traders love the NAS. Let's see what happens today. Like if we can get some sort of really sharp bounce back, which again, this market's been incredibly bullish. If we got something like this, right, that could be a sign that that's all you're going to get, like a quick, and this is common in bull markets, right? Like it's common in bull markets to get 3 to 5% pullbacks and for them to easily be bought up. So on the NASDAQ, you're talking about we had a 4.4% pullback. That could theoretically be it. Am I long it right now? No. Would I be interested in longing if it came back into this area? Yeah, I'd take a small bite there, right? Not a big one. I'd take an attempt there. If it moved down to 22,200, I would take a bigger size position and try again. So, maybe something like this. I missed this entry on Friday. Like I said, I was traveling, but if we were to get a pullback into this area, that could be interesting. If I was to get a move back down to this area here, that could be interesting too for another attempt. But yes, for me, I'd be playing more for the bounce personally with a stop loss on it, just in case, if we want to really roll over, I just want to get out of the way of it. I'm sorry, I'm being bad about reading the chat. You guys have wonderful messages today. I apologize. I'm just trying to get through a lot of charts and catching up on everything I missed. Why is NAS bullish and not SPX? What are the different variables? I figured they usually run together. Yeah, Lana, so that's a good question. The main thing is a lot of times it actually comes down to sentiment and the commitment of traders data, right? Specifically. So if I go look at COT data, let's just see what took place. Like this week in the NASDAQ, there was some accumulation, some buying, more so than shorting. SPX also, but here's the thing, right? So the EdgeFinder scores this. It looks through a bunch of stuff and it's still saying, look, EdgeFinder spotted that the SPX is still very overall shorted by institutions, right? 62%, 63% of positioning on the institutional level is on the short side. Only 37% is on the long side. So it's saying that one is a little bit more short heavy for institutions, but the NASDAQ tech trade seems really strong by institutions, right? So the EdgeFinder automatically went and scouted that out. So you're asking, how is this EdgeFinder, why is it picking NASDAQ over SPX? A lot of it is, okay, it spotted institutions are more bullish on the NASDAQ than on the SPX, right? It did that for us automatically. Show up to the trading desk that's already been scouted out by EdgeFinder. That is what the EdgeFinder does, is it digs through all the data and generates ideas. So, that's one component. There's also, of course, market sentiment in the sense of the put to call ratio, right? So SPX showing us this is actually sort of a contrarian bullish signal. We had a big spike in fear on Friday. That actually is very interesting to me. So you got a big spike in fear. People bought puts on Friday big time. Take a look at the NASDAQ. NASDAQ not nearly as extreme, right? I thought that was kind of interesting. So this actually is a little bit more favorable towards SPX because you have a more kind of crowd sentiment seems to be a little bit more shorting the S&P. So all of these things, right? What the EdgeFinder does, what it is, the reason it is very why the EdgeFinder is the utility of it is it looks through a ton of economic data, technical data, and sentiment data, COT reports, retail positioning, like we just talked about, seasonality, trend of the specific asset, right? A lot of this stuff impacts SPX and NAS very similarly. This stuff, however, sentiment and technicals can diverge between the two of them, right? What API do you link with the EdgeFinder? Many. We use lots of different data sources, lots of different inputs to the EdgeFinder. We have 3 or 4 years worth of development behind all the different tools that are built into here. We use a very wide collection of data sources, and we monitor all of them, and it's quite a project. But the EdgeFinder is a passion project for me, and it is a tool that gets better every year. So with that said, I do also want to remind you guys that we did some serious upgrades. Actually, yes, this is thank you to producers for dropping this link. If you guys want to try out the EdgeFinder, there is a link right there. We have a EdgeFinder trial available. If that is something that you want to explore, if you want to see if it's right for you, take a second to fill out this form that just got dropped here in the chat to find out more about the EdgeFinder, to see if it's right for you. I say this all the time, but if you are genuinely somebody who is interested in markets and you see the value of having a tool like this, you want to scan fundamental analysis and sentiment analysis, you want to look at seasonality, but it sounds like a lot to you, it's understandable. There is a lot that goes into what the EdgeFinder does. I would suggest starting with a trial. Do the 30-day trial, see if it's right for you, and then you can commit to the full price afterwards. But yeah, fill out that link. Just got shared here in the chat, and give it a shot. Also, quick little plug here for our Telegram channel. I don't know if you guys are already in it or not, but we have got some incredible talent and incredible stuff being put in the Telegram channel. The Telegram channel has never been more high value than it is right now. Like, look at these reports. I'm not the one writing them, but they come from somebody with a ton of market experience. And I just look at these chart markups. Like, if you like miss a stream for a day, or you're like really busy, but you don't want to like miss what we're talking about, we are publishing synopsis of like what's happening in markets at a very high level all the time. I'm putting some stuff in here. We also have team members that are putting in market research and sharing in-depth reports of what's happening, like with the NFP report. If you just want a quick cut to the chase way to keep up with happening in the markets, it is free to join. The Telegram channel is leveling up. We're investing like money into putting the right people in the right places to share market value to our audience completely for free. So take a second, join our Telegram channel. It's linked in the description. It's also linked in the live stream chat right now. Or if you're watching on a television or a device where you can't easily click a link, just navigate to a1trading.com. And there is a Telegram link. I think it's in the header or the footer of the website, but don't miss that chance. I mean, the Telegram channel is like super high value right now. And we do giveaways in there. So if you want a chance to win something for free, there's your chance to potentially enter for a chance to win something. Join the Telegram. Nick, do you trade when traveling, or do you stay off the markets? That's a good question. I always trade. I may not be like executing positions, but I'm always like managing a trade or keeping an eye on what's happening in the markets. So yes, I mean, on Friday I was in the airport and did I place a trade? I don't think I placed a trade, but I was watching it, and on the options world, I was watching it quite a bit. Yes, on Friday, just because the volatility spike. But look at this now. VIX is back down 7.3%. Just how quick, volatility can be very, volatile itself. Shot up here on Thursday, Friday, down here this morning. We'll see. Taking a closer look at gold, it's stuck in a range. I had somebody comment on my video on Friday and they said, Nick, you were so wrong about gold. And I was like, I don't know how else to say this, but I have been so adamantly like neutral on gold recently. There's just not a trade for me on gold at this time because this chart just does not, it just does not give me any sort of clarity. And look at this chart and you tell me, you know, is there a clear trend of which way the market is going here? And for me, the answer is no. And it's like I trade when it comes to like momentum trading, which is, you know, one of the two main strategies that I use. I use a mean reversion style of trading more on options and Forex. And I use a trend following strategy on gold, silver, oil, and indices. And so, you know, when I look at gold, I'm reliant on a move that has follow through to it. So when you have a chart that is stuck in a very tight range, I guess it's not very tight. I mean, this is a move of 6% range. 6% range back and forth in gold for the last few months. To me, it's just like that is not an environment where I can take a really high value trade. And I don't, you know, I just prefer not to try and like short the rallies. Like if you were doing this, then you probably did great, but that's just not how I trade. So I look for, right, this kind of move, a breakout with fundamentals aligning, sentiment starting to get bearish up in these areas, people betting against it. Give me that pullback. That right there is a high probability trade that I've done really well with over time, right? Aligning the fundamentals, the sentiment, technicals, give it all to me at one point, and I am going to probably take that trade. I'm going to put some risk on it. But a choppy range bound market, I feel like this thing has probably robbed a lot of money from people just trying to like impatiently trade gold. There's just not been a move either ways. And I know it's not like it's not particularly favorable to my content either to be neutral on gold. I'll be straight up with you guys. Like my views typically go up when I'm more opinionated and have setups on gold. I know that's a weird thing to think about, but from my perspective as a content creator, a lot of my audience really likes gold and the NASDAQ. If I have a strong opinion on those things, my content typically is more interesting to people. And when I'm neutral on gold, it does not sell very well in terms of views. But it is the honest take that I have for gold at this time. I want to be, you know, I love trading gold when the environment is right. But the key part in that sentence is when the environment is right. We can't be forcing trades. It's going to cost me more than the ad revenue that I would have gotten if I had a forced opinion on gold. Ad revenue on YouTube is not particularly great like it used to be, just as a side note. But anyways, I don't have a strong opinion on gold, but let's maybe talk about something more constructive. What would get me to be more opinion on gold? Well, we had some starts to that on Friday. On Friday, we had jobs data that materially weakened. It changed the calculus slightly. Let me show you what I mean. When it comes to being very bullish on gold, I am looking for a very bearish reading on the US dollar impact in the EdgeFinder's economic heat map page. Also, we did get manufacturing PMIs. I missed that. It was actually weak. Oh, shoot. I said that earlier wrong. Manufacturing PMIs actually came in weak. I missed that on do we have services PMI tomorrow? That's right, I think. So I want to see US dollar impact to be weak in tandem with a price action breakout. And then I probably take a long on gold. Like I look for a pullback and I long gold. But until I get that set up, I can't really justify what's happening there. Ad revenue from YouTube really depends from which country people watch you. That is true. Where people watch you, another really important one is how well consumers are spending money, because advertisers are willing to pay more. They'll bid up for advertising space or real estate when they're getting a better ROI on their advertising budgets. And during like 2020, 2021, advertisers were getting huge return on investment. Hence, ad revenue on YouTube was very high. Nowadays, it's not so high. There was a point where the YouTube ad revenue on my channel was at one point in particular, it was like $7,000 to $8,000 a month just in ad revenue, which was insane. like very, very awesome. Because of course, behind the scenes, we have a team of people that go into making this content. So I have, a full-time staff of people that put the content. At this point, ad revenue does not pay for, it doesn't pay to keep the lights on. It's really EdgeFinder sales that make this content free, to be completely honest with you guys. You guys know I'll always keep it real. Ad revenue covers does not cover, the cost of doing business here, but it helps, but it is one of the factors. It's like ad revenue going off a cliff does not help things. But fortunately, the EdgeFinder has come a long way and it's doing really well. So if you want to support this channel and get the best content out there, plus the best tools out there, get a copy of the EdgeFinder, support our work. It is something amazing that you get to use every day in your trading, and it supports the free content that we put out on YouTube. It's like capitalism 101 around here. The content is free because we build software that genuinely helps people, and the content which pays for the content. That's like the full circle A1 trading model. Is we put out free content that does showcase a tool that offers great value to people. People pay for that, which pays for the free content. It's a circle. Did you mention, Nick, EdgeFinder is getting upgrades? Always. So we are always working on the EdgeFinder. We're also working on a stock product right now, which is very exciting, the stock box. If you're interested in stocks and you don't know about the stock box, I don't have time. We've run out of time. I've got Ivan, who's taking over the stream here in just a second. But check out the stock box. If you like stocks, holy mess, we're building something cool over here. The stock box is going to be a way to track stocks in a similar way to EdgeFinder. You'll be able to pull up your favorite stocks and essentially get AI generated overviews, as well as financial data, as well as price data, trend score data. It's still heavily in development, but we are offering it now. We have an early access version available. If you want information, if you're a stock trader, give me a chance. Head over to a1trading.com and explore the stock box. So a1trading.com stock box. You can explore the tutorials page, and yeah, it's really exciting. Stockbox is coming to life this year. There it is. Anyways, guys, up next, we are going to have Ivan take over the stream for a little bit, going through some top setups that he's watching in this market. Last thing before we jump over to Ivan, make sure, guys, like I mentioned earlier, it is free to join. The Telegram channel just got a major overhaul. We're just sharing way more valuable content than we ever have. If you want to stay up with the markets, even if you don't have time to watch the streams or videos, if you're busy, I totally get it. Make sure to join our free Telegram channel. We'll drop the link here in the chat. And just as a reminder, we do also do giveaways in there, free EdgeFinder copies, things like that. So don't miss the chance to get a copy of the EdgeFinder and also free value in the Telegram. There you go. Link is in the chat or in the description down below. Coming up next, Ivan, check him out. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
As your, I don't know, A1 mentor, I hope you guys are in Discord. And I hope that you guys were participating in the weekly planning meeting in Discord yesterday. And this morning, we were talking about how to make a trade plan, not the YouTube way, but the experience and the experience way and whatever, right? So how you're supposed to and how to improve yourself. And it's not a selling point to be in Discord, but if you are in Discord, would be great to join in the conversation. And if you need help in Discord, that's kind of where I want to start today. Because dollar is kind of what I said yesterday. And somebody called me rude yesterday. So I'm trying to not so rude. But let's see how this goes. I really so I really want dollar to behave as it always does, and there seemed to be like I really wanted to be dollar bullish in August. I think it should rise. I should risk off is there. And then NFP came on Friday, and I'm like, what do I do now? And when I set myself out to trade, and I think, okay, what's going to happen here? What's cooking and what's not cooking? Um, yeah, I think dollar is doing whatever dollar does, and in my experience, it doesn't need to happen, but my experience tells me that we are likely going to fall on dollar and $dollar higher, $dollar higher, ATC, and blah blah blah. Now that doesn't need to happen. Currently, we are in a position where I can sell it. Somebody asked me a bit earlier in chat, like if I was to buy dollar. Um, yeah, I do. Would like to buy dollar, but as I also mentioned yesterday, about 97.5, and that's about at least 100 pips away from current. Current isn't, in my personal opinion, only a great level to buy from. So I personally wouldn't think of this as a great level to buy from, and because I have seen so many times that when I trade from this level, as I also told, who did I tell? Hi, Samson, you've been with me for a very, very, very long time. Um, yeah, I wouldn't buy dollar at current level, and that's just yeah. I told someone to test, and my testing tells me this is not a great level to buy. That doesn't mean that there isn't a level for you. It's just that for me, I'll rather take a sip of water and enjoy my day. What I do more than anything else enjoy is the yens. And you guys can call me yen man. I know I'm the yen man. And I said, I really want this to go bullish. But I fear and I think and I believe we might do that mid-August. And 4th of August is not mid-August. So that's a problem. That's not really that's a long time from now. And what should we do in the meantime and all that? It can still rise. It can still go bullish from now. It's just that currently we're not bullish. So what do you do then? It is bearish. And dollar yen just made a new lower low and it fell on Friday. So are you going to sell in between? All those questions comes from a mind of I want to trade instead of set up. I also said about early I said a bit earlier where it's about process. It's about being objective, and current dollar yen isn't giving me that objectivity on a perfect trade setup that I really want us to do. And as I mentioned, as what I mentioned earlier, but what I want to mention is I got out about 148, 148 and a half, 148 something, 148.8 something, and 146 and a half, and then we went up to almost 151. That is beyond my control. I don't really care about that it went to 151, other than what is currently going to happen going forward this fall. I really want you guys to plan ahead. Have a plan, have a notion, have something that you think is going to happen, and then test, and then you're right or wrong. But now you know until the future. Because there's nothing I know that worse, and there's nothing else that I really can think of is what if. I had a discussion with Maxi on Sunday. No, sorry, on Friday, sorry. And I said gold was at a good level to buy from. And I knew that he was short. And I said, that's a good level. And I didn't say anything more because I don't really trade gold. But then NFP came out and it skyrocketed. And unfortunately for him, not to call him out of it, he experienced lack of profits or break evens or surpluses. What's going on here? My experience of testing that I have been doing for quite a while is not limited to my ego or whatever. I really hope that over time we can develop levels, understanding of levels, and how they work. This could have failed. It doesn't matter. As it failed over here, as it failed over here. It's just that when it comes to trading gold or whatever it is, it's not really about what I believe should happen. It's more of where do I predict the market to do before they even do it. And I never put any money on it, so I can't claim it by any chance or any means. Everyone can see it's a range. Everyone can see that's a low price, and everyone can see they went higher. Great, fantastic. We are geniuses. What if it went down to 3,000? Would I be an idiot? No, it's not really about that. And what I really talked about in the past 24 hours is your engine, your understanding and your process of information. How do you process information? How do you develop yourself to take in all the information you've been provided? As Nick is a great uh, practitioner of, and taking away, take away everything that doesn't matter. And if you do decide to, Trump doesn't matter to me, um, wars doesn't matter to me, NFP doesn't matter to me, then you are actively sabotaging yourself from winning, I would argue. Because in that information, let's say Trump says he wants to fire Powell, which he did say. I think, well, he has probably said it a couple of times, but nevertheless. Last time that moved the market, it was about here, as I remember correctly, 16th of July. And then he came out later, so there was a rumor from his government, and then he came out and says, no, I'm not going to. And market collapsed. So we rose quickly and we fell quickly. In that market, it was really fast moving. People would be like entering like buy is growing higher, great. But that was not necessarily a move that was sustainable. So what is your engine telling you to do? Your emotions are like, whoa, 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 whoa. It's going fast and higher. There is momentum here. But me as a trader, I would say, hey, it's no longer at support. I want to be at support. This is resistance. This is dangerous. This is higher. This is not where I want to be. This is not where I'm supposed to be. Don't you think that BTC should reverse and can touch a 108,200 level in the upcoming days? I'm not in the business of saying prices on BTC because I've tried that many times and failed miraculously. I would argue that I really want to see, I'm not predicting, but I really want to see a fall in BTC. I really want to see a pullback, even though that has happened. And I want to be higher by the end of the year. But I also acknowledge that there's a lot of risk, a lot of manipulation, a lot of, let's say, markets or players or drivers that want this to collapse and go into half, which has happened before more times than I can count. So even though BTC is high, it's above 100,000, probably should continue into heaven and everything else. I really want it to come down to 90s, and that's a price level of not 90, not 900, not 90,000 per se, but I wanted to have a deeper pullback because what is currently happening is not really sustainable. And if that happens, and then we go into October and it doesn't happen, then okay. But August and September is quite a volatile time of year for BTC. So yes, we are higher. Yes, we have fallen down. Yes, we have made a micro thing. But if I remind yourself of last year, that was 5th of August, about now, we made a low and we went into a range before we took off in about November. That was probably because of the election. Again, 2023, we had a bit of a low on 15th of August, took off in about October, November. We were in 2022, we even fell. August was a high. It doesn't need to happen again this year, but just a precaution. Just have a thought of what has happened before, what is likely to happen, what drives currently BTC, or for that matter S&P, or for that matter NASDAQ. It doesn't really matter. NASDAQ and S&P hasn't really had a really good solid fall yet, and I'm waiting for it and I hope for it as a buy opportunity more than anything else than a reset. And everyone who says, "Oh, we're gonna crash," I close my ears for it. Trump gives you anxiety. Trump gave me anxiety, now I'm just angry. Ever since Trump is in office, markets are just jumping around up and down. Dude, it's just too unpredictable. I think that dollar yen was very predictable this summer. Just to mention. But hi, sir, Ivan. I'm holding NASDAQ long from 2284 level. How do you look at this position? Is it better to hold or book some profits? But here, I do not give you individual trade recommendations. But what I can say is NASDAQ is higher volatile, has a higher beta. It would rise and fall faster than anything else. And now I'm not going to argue that it should and it can, but for me, I would hope for it to come lower. But that's kind of completely out of the question right now. What is it matter to you is, are you going to make some money? Do you follow your plan? I don't really care about your entry. I don't really care about your stop loss. I don't really care about your check profit. But are you following your plan? Is this what you plan to do? And did you plan to take profit before when you made the plan? Because the plan is everything that you do. Because if you're going to do this consistently, you're going to buy 22 or a setup where it falls down to 22,800 every single time. Is that profitable? That's my question to you. And if this is if you're winging it, like anything else, like you're just having a parachute and hopes and praise that it should hold and should stick, is that a profitable strategy to wing it every time? So I'm not going to give you a recommendation of anything to do, but I would question: do you have a plan? And what was your plan? Okay, great. Then follow that. And then once you have followed your plan and exited when you thought you should exit, then you've reviewed your plan, and then you're like, oh, but I shouldn't have taken profit so early. And I can just remind you of my reasons for exit is take profit or stop loss. And I have everything else is emotional trading. And I really want to refrain from emotional trading. And what you're discussing with me is emotional trading. I do not encourage emotional trading. Emotional trading is anything else than what you decided to do before you took the trade. So, does that answer your question? Probably not. I would have loved to be in a position where you are in, but I would probably hold it until next year, or hold it for as long as I could. But yeah, should hold it, should not. I don't know. It's up to you. It's what your plan is. Because if I tell you to do a specific action, are you going to learn from it? Because right now you're going through emotions. Are you learning from it? Because next trade you're going to do the same. Because you have now leaned on me and said, "Hey, Evan gave me a really good advice. I should have done this in this situation." But what about the next situation? What about the next situation? What about the next situation? And I'm sorry to say this, but accountability and self-governance, and most importantly, self-control as a trader, is top tier control of yourself. And you have to develop that. And what you're feeling now is very, very, very common. Very good that you feel those way. Very I appreciate that you mentioned it for everyone and for yourself. But please follow your plan and then review and then make adjustments after you have reviewed all trades. But when you have reviewed your trades in a series of actions, is your series of actions making you profitable over time? Does it make sense? Should you change? And then it should be based upon all the other trades you have taken. Does it make sense? Is it profitable what I'm doing? Is it does it even make sense? Or should you just continue? Or should I just start over again? Whatever I'm doing is just random. There's no consistency. Okay. Then you have learned whatever those answers are from your trade, whatever the answers are from the review of your trading history and your trade plan is what you should go by, not what me or Nick or everybody else says. Because I can't be in your head every time and guide you all the time in what you should do. But great. But yeah, makes sense. Do you recommend a prop firm? I haven't taken a trading challenge myself, so I can't out of personal experience. But I generally like to say is prop firms are for you at elite level. You at your best. Your psychology is great. Your trading plan is great. Your trading is great. Um, you are at your best level. You are the elite of yourself. You are the world champion in your world. Your process is fantastic. And if there's something lacking, a trade challenge and a prop firm is gonna show you that in the most brutal way that you are not ready for it. Sweet. What is your thoughts about CAT for a buy? Look into it. What is insights on NASDAQ? Shall I hold? Mention that. It doesn't matter who we are. It matters what is our plan. And do you learn from it? Did you review it and did you learn from it? Because it doesn't matter if you have a plan if you don't follow it, and two, if you don't learn from it, and three, if you are emotionally trading, can you do less emotional trading next time? And buying 22,800, okay, great, okay, but I don't know if that's great how you are supposed to be trading. If you're trading like that, profitable over the time, I'll be over the moon. But if that is your emotional trading, if that's you chasing it, if that's you not following your rules, if that is just you toss the plan out the window, I'll be mad at you. Like, right? I'm not caught up on emotional trading. I have a clear plan. Yeah, Mudas here. Yes, yes, yes. But I can't give you that. That's not why I'm here. Right? Individual, I can't. Trade recommendations. But as I said, if that's how you trade all the time, and if you're asking about how I would trade, I would never have bought there if that's what you're looking for, because that's trying to catch a falling knife, that I haven't seen really turned around yet. But that's just my own rules. And if I would have entered that trade, I would have said you're FOMOing, and I would have marked it as a loss, whatever the profit was. Yeah, I would have broken so many rules in my book that I wouldn't even be able to testify it. Cash basically for a buy, I don't really see the reason for buying a range. So it can happen, but it has to develop way more than. But yeah, but okay, cool. Can you please look at pound New Zealand? Yeah, it's a range. I wouldn't really bother about this one. Because and also for euro pound for that matter, it's the same kind of situation. Is it doesn't really matter what you are thinking in terms of what it should happen, as long as it's in a range over time for euro pound. I don't really like it because it's fundamentally okay. There's profits here, but I just look back in the mentorship meeting and it hasn't moved since 2013. Yes, there is moves. Yes, there's ups and downs. Yes, there's profits, but I don't thrive in a range. I don't thrive in ups and downs. And to be very frank with you, I really want something strong against something weak, rather than something that's weak and strong at the same time. Euro and pound are quite similar economies and quite well, it was at least quite integrated. So it wouldn't make sense to me other than, as I would argue, the Euro New Zealand overall could be a candidate, but it would have been a better candidate if and when would you get into a trend would be Aussie dollar or New Zealand dollar. But at the moment, they are quite in a range, quite range bound. Doesn't really matter what I do and what I say. Um, so yeah. And what I mentioned about it, yes, and what I mentioned yesterday was, um, okay, I disregarded pound dollar, but I really wanted it to come in higher, to about 135 probably, come in higher and then short, um, and then take it from there. Because right now, with dollar strength that I'm hoping for and seeing, it's not really a great place to sell pound dollar. And we have the Bank of England on Thursday, so that also puts a lot of strain on what generally tends to happen, that it would fall initially and then rise, because I don't think we would have more follow-up rate cuts, even the rate cuts on Thursday. I'm not expecting more rate cuts to come in, at least for now. So it probably would raise in the end. And with that kind of, I would rather say, okay, 135.5, wait for that. And if it doesn't, then it doesn't. Then I don't care. But this identify in my book as end of trend. And until we break 131.15 short term, I've been so many times like it's kind of like this, right? It turns out goes lower quite rapidly, pulls back, but then I need to see a reversal before I can think about it. And a reversal here isn't really on the cards today, maybe tomorrow, maybe another day. It doesn't really matter when it happens, because I have to have that reversal before I can, because I can look at it. What's for gold? And I mentioned gold a bit earlier, but I previously said that 3280 is a great level to look for a buy, and it ran away from me. I didn't try to buy it, but that would have been a buy, and I probably said it before. But I'm generally bullish, but it's a range, so I don't know. It's back into the range, so it is whatever it is. Pound yen, euro yen has a bit of a good great day falling down. It came higher, down up to centipede for today. I didn't short it. Didn't really come up to my central pivot, so it can just do whatever it wants to. And if it falls fast, lower, that would be seen to me as a bullish direction. Somebody else asked earlier today, why is yen strong? I would argue it's the opposite of dollar bearishness. It's not necessarily yen in itself being strong. It's more where does the weakness in dollar go into? And what we have seen today is that not really, okay, a bit of Canada, a bit of pound, but more than anything else, yen, something New Zealand, not really Swissy either. So it's really dollar weakness that is going into yen strength, more than anything else. And you can interpret it as Japanese traders or hedge funds are exiting dollar positions and put them back into their own country, more than anything else. So it's more like a short-term move more than a sustainable new direction. Because Rita last week was very eminent that the economy is quite weak at the moment. They're not seeing any reason to rate hike anytime soon. Market's pricing in 2 rate hikes next year, but everything is weak in the Japanese economy. Really, generally struggling. So I think this is just it's just that yen fell too hard, too fast, and it's an August move where we risk off in August, and it's just like we'll risk off in August. Here I am. Okay, cool, great. Yeah, I think that's good enough. I don't want to force internet going forward. But yeah, if you are in Discord, please, if you need help, please hit me up. And we had a meeting today, so the recordings will be out. Other than that, I hope you guys are doing well. We'll do better. Don't do anything else I wouldn't do. And I'm proud of you. And I love your family. Boom.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.